Tuesday, the 7th of May, European stocks drifting off target. Commodities are having a good day. Retail, not so much. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
"30 minutes to the end of trading here in Europe. This is what the price action looks like. Stocks are drifting lower, as I say. Target is definitely a factor. The retail sector is the worst performing sector here in Europe right now. Commodities having a good day. As you can see, Brent crude is up. We're trading up by 0.7%. Nearly £100 to fill up the average car in the UK now. That is going to put a crimp on that retail story as well. Though today's numbers out of the UK actually looking fairly favourable. What happens after the summer? The cost of living squeeze likely to continue at that point. So commodities up, you've got the mining stocks trading higher as well. Retail is down. The pound is fluctuating, 125.82. I'm not entirely sure that we're really trading off Boris Johnson's political fortunes right now. The Bank of England, I think, firmly in focus. The data being watched, Alex, very carefully.
Yep, and those yield differentials really coming into play when it comes to the FX market. We'll get to that in a moment. Here in the U.S., it's very much about target, but also then the recovery from the lows. We've flipped into positive territory in the last 45 minutes of trading. The S&P now up by 0.3%. Even Target, with their negative profit outlook, is only down 2%. And Union Pacific, that's also dealing with higher fuel costs and inefficiencies, that stock climbing now, up by 0.6%. A big part of this could also be, Guy, that we're seeing a lower yields. A big coming into the bond market after the last 5 days of higher yields and breaching that 3%. We're now down below that critical level, Guy.
Yeah, we're above, we're below, we're above, we're below. It's going to be interesting to see ultimately when we break out of that range, Alex. I think CPI data Friday, consumer price inflation data Friday, could be a real factor in trying to answer that question. Let's get back to the politics. It definitely dominated the agenda here in the UK yesterday. Boris Johnson last night surviving a no-confidence vote, but it was a hollow win, and there's now a war raging in the Conservative Party. The vote saw 148 Conservative MPs basically say that they don't have any trust in him. He spoke at a cabinet meeting earlier today.
We've got to get value out of them. We've got to make sure that people see that they're getting the services they need when they want them. And I think if we go forward with that approach, continuing to unite and level up, which is a magnificent agenda, totally the right agenda for the country, but also driving supply-side reform, driving improvement, we will start to see huge changes, beneficial changes in our economy. And we will have the scope, by delivering tax cuts, I think, to deliver considerable growth in employment and economic progress. That is the way forward.
Bloomberg's European economics correspondent Lizzie Burden joining us now from Downing Street. Lizzie, it was a big blow to Boris Johnson's authority last night. What is the cold light of day today delivering in terms of expectations for how long he can cling to the building behind you?
Well, in the building behind me, Guy, they had that cabinet meeting this morning and the focus was on the cost of living. Boris Johnson, you heard in that clip saying that he wants to not necessarily spend more, but spend wisely to cushion the blow on the poorest households. As the ministers filed out, I have to say, not every face was looking convinced. And the question really is how long Boris Johnson can cling to power, because if you look at his predecessors, Theresa May and Margaret Thatcher, they lasted 6 months and a day respectively after they won their confidence votes. Theresa May actually had a smaller rebellion than Boris Johnson did last night. And Boris Johnson had more rebels than his working majority pre-vote. So it's likely that his legislative agenda is going to be very difficult to get through now.
Hey, Lizzie, talking about his cabinet members, did we get a sense if all of his cabinet will be sticking behind him?
They say publicly that they will, but who knows how they voted. Even some of those names are on the runners and riders lists that are circulating with growing intensity, such as the Foreign Secretary Liz Truss, the Chancellor Rishi Sunak, but also some old names, Jeremy Hunt, the former Foreign Secretary, outside candidates, Tom Tugendhat, who hasn't had a senior government role. Exactly.
In terms of what this means for policy, Lizzie, are we starting to get an idea? The Prime Minister talked about levelling up there, but we still don't know what it means, for instance, in terms of his attitude towards triggering Article 16. Does he, at this point, deliver kind of red meat to the Tory faithful? Is that going to be the policy here? And is it going to be that policy ahead of maybe, as he suggests, stabilising the economy?
Well, what's interesting is how divided the rebels were last night. That's kind of why it was a surprise that we had a vote of no confidence yesterday, because it's not just one faction that's angry at Boris Johnson. You've got MPs in the north, the south, Brexiters, Remainers, young and old, and they all want different things. So to keep going with this hard line on Brexit might be quite difficult, actually, and it's going to be harder to tame all these rebels than it would have been had it just been one faction.
Lizzie, thank you so much. We really appreciate it. We know you hustled back for us for your reporting. Thank you very much. Bloomberg's Lizzie Burden joining us there. Now for more, we're joined by Lila Housesmith, Associate Director at consultancy firm Global Counsel. She joins us now. She was a special advisor to both Boris Johnson and Theresa May's administrations. Lila, you've been around when you've been in the thick of this kind of thing. What would you be advising Boris Johnson right now?
Well, there's no doubt that the result is definitely less well than he expected. It won't put an end to speculation. I think he's setting out the right kind of agenda. So the moving forward with bits of legislation. So as you mentioned previously, potentially something on the Northern Ireland Protocol, potentially something on levelling up, which is this kind of regional, dealing with regional inequalities. Those bits of legislation are really able to show his extent of his delivery. And I think there is something around also reshuffling his cabinet, bringing in some of those fresh faces who perhaps have been supportive of him, who will give hope to the rest of the party that there's some new ideas, that there's an opportunity for promotion if they stick with Boris Johnson. And I think those are the kinds of things that will really galvanise the party and kind of believe that they should stick with him kind of 2 years out from potentially the next general election.
Some of these things, Lila, seem contradictory. Jesse Norman, in his forensic examination of Boris Johnson, I thought kind of nailed a number of things down quite well. Boris Johnson was there talking about the economy, getting the economy moving. Yet Jesse Norman, an MP, said economically very damaging. And he's talking about triggering Article 16, politically foolhardy and almost certainly illegal. How can we improve the cost of living crisis and trigger Article 16 if triggering Article 16 is going to be economically very damaging? How do these things go together?
Well, I think what you're getting at there is that there are factions of the Conservative Party who just have different priorities. So, of course, there are people like Jesse Norman who perhaps have never been particularly passionate about Brexit, but who are very passionate about the Conservative Party kind of managing the economy well. But then you have other sections of the Conservative Party kind of represented by the European Research Group, people like Steve Baker, who see Brexit and a successful Brexit as trumping everything, as being as important as dealing with the cost of living crisis. And frankly, they prioritise that. So Boris Johnson sees by kind of bringing forward legislation on the Northern Ireland Protocol, potentially on Article 16, that he's kind of appeasing at least that wing. And I think what you're going to see over the kind of coming weeks and days is him really seeking to kind of siphon off bits of the Conservative Party, win them back through different bits of legislation or different bits of policy action. I guess the question is, can they kind of come together and provide a single vision for the party and something for kind of the whole party to get behind Boris Johnson on? It's not clear. And I think this is the real problem with him having, over 148 of his MPs offside. He can't possibly appease all of them. So what you're going to see is a kind of picking off process. And I think you'll see that in any kind of reshuffle of his cabinet as well, that he'll be trying to look for particular swathes of opinion, or perhaps particular intakes of MPs. So MPs that maybe were elected back in 2019, he'll try and particularly appeal to them over MPs that were elected perhaps early.
Lila, is there anything that he can do that is a quick fix? Anything that he can do to appease certain members, certain MPs that can also have a meaningful effect? I mean, it feels like the cost of living crisis, leveling up, and Brexit are all things that cannot be done quickly.
So I think what he's going to be looking at is what's on the stocks, what are the policy announcements that they can bring forward. And we saw this a little bit with the announcement around Rwanda and refugee and immigration, that they clearly had been working up that policy for some time. They then had sort of the worst of Partygate and the horrendous news headlines around that, and then they kind of roll that forward a bit quicker. I think that's what we'll see potentially with the legislation on Brexit and the Northern Ireland Protocol. They'll go quicker with that, and likewise with legislation on levelling up. But there is no single fix that is going to get the whole of his party on side.
If Wakefield goes badly, if Devon, Honiton and Tiverton go badly, do you think we're going to be back here fairly soon? Do you think Boris Johnson is really safe for a year? I
think if the two by-elections go as predicted, if they're both Conservative defeats, I think we're definitely looking at the 1922 committee revisiting that rule around the year of safety for the leader of the Conservative Party. So I think it's extremely likely we're back here. But another confidence vote alone, is that going to be enough? Sure. I mean, they would have to move the dial some way to get a majority against him. I think we also should be looking to what's going on in the cabinet. What are the members of the cabinet thinking? Are we going to get any resignations? It's the combination that we found during the Theresa May period that actually tips the Prime Minister kind of out the door, if you like. It's unlikely to be kind of one thing. It's that building momentum, which we'll kind of be able to see over the coming months.
Quick question before you go: if they are able to sort of tip him out the door, who's in line behind him?
So I think the strange thing about this is it's a very open field. We're looking at a field that is as open as it was when Theresa May was deposed. So as your previously reporter mentioned, you've got people like Tom Tugendhat, who have never held a government post, but you've also got people like Jeremy Hunt and Rishi Sunak, who have been building that support for some time, who clearly have a track record that they're keen to point to. And I think it's really going to be a kind of competition between the obvious people, the Jeremy Hunts, the Rishi Sunaks, the Liz Trusses, and those outsiders, even people within the cabinet. So people like Ben Wallace, who's discussed but has never yet kind of made any intentions clear. And I think it's going to be a competition between those outsiders and those people that we've expected to have leadership ambitions for some time.
Feels a little bit more inevitable after last night. Lila, thank you very much indeed. Lila Housesmith, Associate Director at Global Counsel, thank you very much indeed. Coming up, the pound actually to a certain extent today shrugging off the Prime Minister's problems here in the UK. Probably more to do with other factors, including the data we've seen. Little changed on the day. We're up by around 0.5%, as you can see, 125.82. Where does it go from here? We'll try and answer that question next. Jordan Rochester joining us from Nomura. He's got a short on cable. That's his key FX trade, actually, going forward right now. We'll have more on that next. This is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month and all year long.
Pound trading a little bit higher today on the cable rate. Is that really anything to do with the problems that the Prime Minister is experiencing right now? Let's try and answer that question. Nomura FX strategist Jordan Rochester joining us now. Jordan, can we draw a line between politics and the pound today?
I think we can, Guy. I really think we can. The politics won't be moving the pound until we have actually Boris Johnson leaving office, until we actually have some policies to talk about. And if we do have a vote of no confidence in the future, if the runners and riders make clear what their policies are, at the moment, it's just kind of aimless, the politics. We had a big fiscal package just the other week. It barely budged the pound higher because it was quite largely expected. That was the energy subsidies. Now that's been addressed. The cost of living crisis is still going to be here with us. And it's not clear what will be announced this week in the housing speech. I think that's coming on Thursday. And any other speeches in the next 2 weeks that would boost growth expectations in the UK. So with all of that said, politics aren't going to be moving the pound. It's going to be global macro, I think, that will really determine things.
Yeah, and sort of hedging political risk over the last couple of years, since Brexit really, has been in some ways a losing trade. So as Guy was talking about, and the tease to you is that one of your key trades is you're short the cable rate. What's your level and what's your reasoning?
Well, we have a very aggressive target on that, which is 120, and that was when euro was going towards 104. So that target is perhaps a little bit too aggressive, but I think the general direction is lower for sterling. And the main reason is the UK is one of the major economies that is dealing with a cost of living crisis, just like Germany, France, and the US. But it has done less to subsidize energy costs. So the UK consumer is paying more than it should be compared to European peers. France, for example, energy prices only went up by 5%. For the UK, it was 50%. And taxes. We're one of the major economies that have raised taxes in this slowdown. Many of the others haven't done that. So there's a double whammy of hits to the UK consumer. We're just looking at the services data this morning. The services PMI did come in a revised stronger number. That might be why sterling's a bit more bid in the afternoon session. Things aren't as bad as we feared in the initial flash release of that PMI. But I do think the general direction for UK services is lower over the medium term. There's going to be some noise over the summer as everybody wants to take a holiday. We saw that with the bank holiday rush, the Queen's Jubilee. So looking into June's data is going to be really noisy, trying to discern what the trend will be. But in general, I think the UK was the first to relax their COVID measures. So we're going to see the UK be first to slow down after those COVID measures play out in the data.
One quick question just on the politics, though. Triggering Article 16 could have an economic impact, may cause a trade war with the EU. There's a lot of ifs and buts around all of this, but it looks like potentially one policy Boris Johnson could pursue, particularly when it comes to the right fringe of the party, would be to trigger Article 16. How would the pound react to that?
Really badly, Guy. It's hard to put a number on it because Brexit has been out of the radar as to trading sterling. But the market will then start asking the questions, well, if they do trigger this, what's the EU's response going to be? Will it be tariffs? Will it be quotas? Perhaps the threat will come first and the actual tariffs and quotas won't happen because maybe a negotiation takes place and avoids that. But I've been telling our clients that it's just political noise. It's just a sort of olive branch to Brexiteers to keep them on side. The idea of the UK going down that path just seems very short-termist. I'm not really clear what we'll get out of it, given this is the Northern Ireland Protocol that we signed up to in the first place. So let's imagine on Thursday, Friday, this is where we are when the legislation's laid out tomorrow. Sterling, I think, will be trading something around 123 on just the idea of the UK going down this more aggressive path. I think short-term, maybe wins over Brexiteers. Medium-term, Boris Johnson faces a vote of no confidence even sooner.
Let's broaden out a little bit, broader central banks. We had the RBA hiking by 50 basis points. I read a note that was like, is 50 the new 25 in terms of hiking? And I'm wondering what your take is on that and how that's playing out among the G10 FX differentials.
Well, if you look at the G10 central banks, who's got the most aggressive policy rate priced in for the next 2 years, it's the RBA, followed by the Riksbank. So with the RBA, I can kind of buy into that, commodity exporter, dealing with global inflation pressures like we all are. For the Riksbank, I really kind of disagree with the pace of tightening that's priced in. But keeping it to the RBA, we expected 40 basis points, so it wasn't really a big surprise for us. It was more than what's priced. I thought the market reaction was quite strange. Aussie dollar spiked higher, then came off. It's come back in the afternoon session. So the trades we've got to capture this is long Aussie dollar, but I think the one which I have more conviction on is long Aussie Kiwi. That trades RV, strips out this noisy dollar from that perspective, and I think you can expect more to come in Aussie Kiwi in the weeks ahead.
Jordan, how long can the Bank of Japan stay on a different page?
Well, it's however long they want, Guy. It's up to them. It's a human decision. Let's think about it. So the Bank of Japan is facing inflationary pressures, the highest they've had in decades. Inflation is nowhere near as high as other developed economies. So around 2 to 3%, let's say, for this year, Japanese CPI. It maybe rises to 4 to 5, but it's nothing like what the Eurozone is experiencing, 7 to 8. So the pressure is less, but it's still a political story. The cost of living does matter. But for me, I see this as the Bank of Japan's first time having a chance of having inflation overshoot in about a decade. And here we are talking about a hawkish Bank of Japan potentially trying to end that party. So we're going to be juggling this line of the Bank of Japan not wanting to be too hawkish, but the government wanting to address the cost of living crisis. So there's a political dimension there. I think, Guy, essentially, rather than raising rates, what we might see is the yield curve control either comes to an end towards September time or is tweaked at least with the level raised higher. So that could spur in some yen strength. But market is already pricing that if you look at the swaps rate. So maybe it isn't that big of a surprise if they were to do that. But the idea of them raising the very front end of the curve, so talking about 25 basis points, 50 basis point rate hikes, for the Bank of Japan, I think by the time that could even happen, we'll probably be in a global recession, and it's not going to happen anyway.
Hey, Jordan, I can't let you go without asking about the trade into the ECB on Thursday.
Really tricky one. I think that the market is quite quiet, just waiting to see what the ECB will do. We've got into a place where, you mentioned it already, Alex, the market essentially says for the July meeting, it's either 25 or 50 for the ECB. We're on the 25 side of the debate, but nobody's on the 0. So the market's pricing always 25 or 50, 25 or 50. I'm still thinking that the gradualism will stay in the language for Madame Lagarde. It will be in the 12:45 release and the 1:30 press statement. If the word gradual is not in there, the market's going to buy euro to the hilt, because that suggests 50 basis points in July becomes possible. But I think gradual stays in there. And if that's the case, there's a bit too much priced in for September. But the path for inflation in the Eurozone is higher, and I think it will be higher than what the ECB expects. So there's this trade-off between slowing growth, which I think really matters for euro, and higher inflation, meaning more hawkish ECB. I think we're getting to the tipping stage where euro will start to head lower again this month, as there's quite a lot already priced in for the ECB.
Hey, Jordan, it's always good to catch up with you. We could talk to you all day. We got to leave it there, though. Jordan Rochester, Nomura FX strategist. This is Bloomberg.
It's time for the Bloomberg Business Flash. A look at some of the biggest business stories in the news right now. I'm Ritika Gupta. Shares of Target are falling. The discount retailer cut its profit outlook for the second time in 3 weeks. Target's trying to ease a surge in inventory by marking down more merchandise and cancelling orders. Operating profit will amount to about 2% of sales in the current quarter. That is well below the 5.3% Target estimated 3 weeks ago. Citigroup will hire about 3,000 employees for its institutional business in Asia. The new staff will work in areas including investment, corporate and commercial banking. The bulk of them will work in Hong Kong and Singapore. There will also be new jobs in India, South Korea, China and Australia. Then that is your latest Business Flash. Guy.
Ritika, thank you very much indeed. European markets are about to close. London is outperforming. The miners are doing a little bit better. The DAX and the CAC both down. Details to follow. Closes next. This is Bloomberg. We're done for the day. Europe wrapping up. Mixed session. Commodities at one end, retail at the other end. That mix is basically affecting the lie of the land, as you can see on the map. CAC's down 0.8%. DAX is down by 0.7%. London's only down 0.1%. So a flattish session for the London market. Energy, commodities, certainly a factor behind what we're seeing there. Let's take a look at how the session has developed from a Stoxx 600 point of view. This has been the day. Drift lower, actually, throughout most of the day. A little bit of a pickup in the last hour or so, but we're still down by around 0.3%, just sort of drifting off. We're down by 442. We're down trading at 442.93. It's not a huge session, and it's being delivered on quite light volume as well. Liquidity, certainly a factor in what we're seeing at the moment in terms of the ability to execute trades. In terms of the breakdown from a sector point of view, looks a little bit like this. As I say, the commodities up top, retail down at the bottom, basic resources up by 1.45%, the energy sector's up by 1.27%. Just see the kind of tick, tick, tick on your Bloomberg as you watch the news headlines crossing. Energy stocks, 52-week high, 52-week high, 52-week high. Retail stocks, and I think Sainsbury's is an example of this in the retail space today, 52-week low, 52-week low. Technology is the big loser today, but retail, with that target story over in the United States, certainly a factor to keep an eye on. The data out of the UK was actually okay today, but nevertheless, the expectation is that things are going to get tougher from here. So that's the kind of breakdown that we're looking at right now. In terms of the individual names, let's just talk about some of them. Biffa in the waste disposal business is up and climbing sharply today. Yet another company potentially being taken out by a US private equity company or rival. The pound is cheap. The UK looks like good value right now. Biffa, Energy Capital Partners, I think, is the latest story to be in focus here. And Biffa potentially receiving an offer there. The stock surging, as you can see, up by nearly 30%. If the company is prepared to be bought out for that kind of level, why is the market valuing it in the way that it is at the moment? Why are we getting that kind of premium pickup? VW is an interesting story. I don't know if you saw the Handelsblatt first thing this morning. The story on the front page was basically about a battle between Group CEO and Audi CEO. There's an issue with what is happening with the development of the software packages at Volkswagen. Now, Diesel's talked a lot about this. He basically wants to create a big silo at Volkswagen to create the kind of software that is needed to compete with the likes of Tesla in particular. Now, if they can't get this right, and the supervisory board is getting involved in this now, it could potentially delay some of the really big product launches that Volkswagen is going to have to lean on heavily going forward here, particularly some of the Porsche models, which are going to be so critical and so high margin in terms of the profitability story. Really, really important. Then Rio Tinto, up by 2.45% today. I think there was a Jefferies upgrade as well coming through for some of the miners today. That's certainly lifting the entire sector. Rio, a beneficiary of that, but commodities generally, Alex, really quite nicely bid today. That stock up by 2.45%.
Yeah, you can take a look at Exxon, for example, hitting a record high. 102.19 is where we hit earlier in the session. Oil getting an upgrade from Goldman Sachs earlier, talking about how you're going to see $140 a barrel. That's going to be the peak in the summer. That's going to translate into $160 in terms of consumer Brent prices. And only then will we be able to see enough demand destruction to bring the oil price down. And here in the U.S., for example, consumer staples and discretionary, I should say, getting hit the hardest within the S&P. On the upside, of course, is energy, still up by about 1.5% as the markets really try and stabilize here and turn around. So let's get more on the markets. Want to bring in Rebecca Chesworth, State Street Senior Equities Strategist. Rebecca, good to see you. Do you buy in to the value/commodity trade right now already at these levels?
Still, yes, that's the answer. I mean, energy's going one way, the rest of the market goes the rest. The more that helps energy, so every time the oil and gas prices go up, forecasts go up, they hit everything else. So it has been a major story for investors so far this year. They were underweight at the start of the year. They're now back up to weight and overweight, and yet we're still seeing buying of this area.
So it's still cheap at this point?
It's cheap because forecasts have gone up. And if you look, maybe over 2 years, it doesn't look cheap. But if you look over a 10-year period, then the PE relative looks relatively cheap, yes.
Does that come at the expense of selling growth?
Well, I think that's a trade that people expect to slow down because we've seen quite a bit of value versus growth so far this year. But on the whole, we think value will continue going up. And in this rate-rising environment, that's got legs to it. It could be some time before we see those tech shares really come back.
Just as an aside, the UK is rich with those kind of commodity stocks. Got a lot of energy stocks, got a lot of mining stocks. We've seen the upgrades today. Rio up quite nicely. The energy names also climbing as well. Does Boris Johnson have any impact on that trade?
Not really. I mean, we thought we'd see that because, of course, we had the windfall tax announcement last week and we kind of blew that off. And actually, if you think about it, energy's 12% of the FTSE All Share. So that's 2.5 times any other developed world market. So that's really why UK equities have done so well this year. So they're actually the only developed market that's up this year. And if you see the impact today, so market flat, even though we've got this huge uncertainty still over the PM, but the oil price still being strong, you can see where the major impacts on the market are.
Well, Rebecca, just one more quick question within that. Is there a shift, though, in terms of, say, mid and small cap versus the large caps in the UK?
I think that things have been in favour of the large caps initially, because these are the international stocks. They're staying well aware of the domestic economy. But overall, investors look at this market and they see a cheap market. So if you look across the all-share now, you're looking at 10.5 times PE. That's a 35% discount to the rest of the market, 4.4% yield. What's not to like?
Do you think the lows are in for this year in terms of stocks?
Ish. So I think whenever we get to these levels, we're seeing buying.
Yeah.
We're seeing buying, we're seeing it from our institutional investors and we're seeing it from our ETF investors. But it doesn't mean that we're not going to see those levels again. Because what we're seeing at the moment is a tug of war in terms of good news has become bad news. So day by day, depending on what that economic news is, we're going to keep coming back to this level until something breaks. And we have to move beyond some of these key decision points. We're not going to know yet whether there's going to be a small slowdown or a big recession. It's too early for some of these things to have come to an end, some of this seesawing that we're seeing.
We just don't know, which leads to the question, do you want to kind of, how much do you want to be in cash then, until we know the answer to that question?
Sorry, how much do I want to be in tech?
Cash.
Sorry. I think you have to have some cash balances. Now, interestingly, we had an update from part of our business this morning about cash levels, and they're still there. Investors still have cash levels, but they're much lower than they were at the start of the year. So one of those areas of protection has fallen away as investors have got some of their risk confidence back and have been coming back into the markets in the last 2 weeks. But it's still not the time to go all in.
In terms of, you just described two scenarios. We're going to get a softish landing, and that's what the Fed is talking about, or are we going to get a full-blown recession? How do I hedge for the differences between those two? And can stocks kind of actually have a bad time in both of those scenarios?
Well, I think, so what we're seeing most of all is we're seeing investors being very selective, and I think that's important. So on the one side, we talked about energy. That's one way. So energy does quite well in an inflationary environment. If you barbell that with something like healthcare, which does well in a slowdown, then you can cover yourself from that aspect. The other way we're seeing investors being selective is they're buying dividend strategies. Because the dividend stocks tend to be lower volatility, higher quality, and actually by increasing the return of the proportion of your return from dividends, you're less worried about capital return. And we're seeing that as a big trade at the moment. So if you can hedge it via equities but being selective, that is one way going forward.
Rebecca, I just want to sort of get your take on something happening in the U.S. and then broadening out a little bit. So Target comes out 3 weeks. They have another pre-announcement to the downside in terms of their operating margin. The stock gets hit hard and then comes back from that, down only about 2%. And I'm wondering if we've reached the point where this kind of bad profit news has been priced in yet, or do you expect more earnings revisions broadly to really take hold in the next few weeks?
Particularly in consumer, I think we could see some more. Very interesting to see today, when you looked earlier on today, particularly in Europe, the downside to the market was being led by some of the internet online retailers, some of the food delivery companies, in the sense that we'd forgotten to price in some of the bad news because the consumer has less money, but also they're going to shop differently going forward because they're not necessarily buying online and physically as well. So it's like we forgot to look at every consumer stock, and there's now some catch-up in some of them. And I would think with something like Target, what they described today about a change in the mix and about getting their inventories wrong and about people changing their shopping habits, well, that could catch them out again this summer. I think it's going to be particularly hard in some areas of consumer discretionary, and particularly in those retail. Some of the leisure stocks may be difficult. So it's easier to pick on those areas. Maybe some areas like the luxury goods might be stronger, but those areas, online retail or physical retail, are difficult.
What are you expecting in bonds? Inflation may have peaked, but it may come down slowly. The US 10-year, either side of 3%, not really a convincing breakout in either direction. What are you expecting to happen there? Where do we go from here? Is it a convincing move lower in yields, or have we still got further to come?
Well, it's interesting because that 3% level really is a psychological level we find for a lot of our clients. So that's the level at which they start to find things attractive again. But having been burnt so far this year, investors are slow to return. So even though we're seeing inflows into fixed income ETFs, they are way below those that we're seeing across the equity space. So they're being more selective. Now, maybe the place to look is in something like investment grade, where you've seen that spread widen. So you've got some protection now because that spread has really widened against the treasuries. So even if some things come back, you've got a margin there. And also, for now, the corporate is still looking pretty strong. We're not seeing signs of credit rating downgrade, so maybe there is, for those who want to go back, something like that to play over the summer months. But people aren't in any hurry at the moment.
Okay. Interesting to see what's happening in the flows. It's interesting, maybe IG. Certainly, maybe people are talking about a default cycle further down the credit spectrum. Rebecca Chesworth of State Street. Thank you very much indeed. OK, let's just check the final numbers here in Europe, just to give an idea of what is happening. We are convincingly through the auction process. Let me just see exactly what has been going on. A little bit, maybe, of a move, but not much, actually, as we've come through the auction today. A little tick lower for the FTSE 100, but only a tiny one. We'll have plenty more coverage of what is happening with the political story here in the UK and what the economic impact of it's likely to be. The cable coming up, Alex and myself, 5 p.m. here in London, 12 p.m. over in New York. We're on DAB Digital Radio. Of course, find us on all your Bloomberg devices. The podcast's available on Spotify and iTunes. Alex.
All right, well, coming up, we're going to talk more about Target. Yet again, we got 3 weeks after its profit warning. Target cuts its outlook once more. Shares falling, but off the lows of the session. We're going to talk to shareholder Cole Smead, Smead Capital president. He's joining us next. This is Bloomberg.
This is Bloomberg Markets, the European close. I'm Ritika Gupta. You're looking at a live shot of the principal room. Coming up, Binky Chadha, Deutsche Bank Securities Chief Global Strategist, joining Bloomberg Television, 3:30 p.m. New York time. This is Bloomberg. Keeping you up to date with news from around the world, here's the first word. I'm Ritika Gupta. Boris Johnson is trying to draw a line under the controversy that he's been threatening his leadership. But the scale of a mutiny against the British Prime Minister suggests his days may be numbered. Johnson survived a confidence vote by members of his own Conservative Party. Still, more than 40% of Tory MPs voted against him. Johnson now says it is time to get back to helping people with the cost of living. The US has warned Kim Jong-un there will be a strong punishment if North Korea conducts a nuclear test. Both Washington and a United Nations watchdog agency says there are signs that North Korea could soon set off its first atomic device since 2017. Kim's regime has been test-firing missiles at a record pace this year. And tourists visiting Japan may be sent home if they don't follow rules on wearing masks and sanitizing their hands. They also must buy private health insurance. Japan is set to allow package tours starting this Friday. Borders have mostly been closed to tourists since early 2020. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. Let's get back to one of the top stories here in the U.S. For the second time in 3 weeks, Target's cut its profit outlook. The discount retailer is trying to get rid of some bloated inventory by slashing prices and canceling orders, among some other things. Joining us now, the president of Smead Capital Management and Target shareholder, Cole Smead. Hey, Cole, do you buy in this dip?
Well, we're interested to see what the insiders do right now. To your point, Alex, I mean, the stocks come roughly back from a 10 times book price to 6 times book. And depending on how things settle, we look at this as like a 2-quarter problem. Right, it's going to take them about 180 days to kind of sort out, what the inventory is for the consumer that they serve. This is not a long-term problem on the business. I mean, the come down in their return on equity brings you down to something around 30% return on equity. I mean, Walmart makes teens return on equity. So this is a completely different problem for a business like Target. To take you back, Alex, I mean, their lowest return on equity was the summer of 17 when they had to deal with Whole Foods being purchased by Amazon. And that's where that stock's come from. I mean, it's done so well over the last 5 years. You're coming down to a triple in the stock from that point.
Cole, why are you so convinced that management is going to get better at predicting the consumer in what is a very volatile time? Predicting the consumer looks really tough at the moment, probably more difficult than it's been for really quite some time. Why are they going to get better at it?
It's a great question, Guy. And I agree with you. The consumer is really tough to figure out. The consumer is way more dynamic than anyone has thought, right? We go from shopping online and saving a ton of money to going out and splurging and wanting to not shop online as much as we just did in 2020. So I think the dynamicism of this consumer is incredible. And you have to remember, undergirding this business is a bunch of millennial women, born from 1980 to the year 2000, and they have kids. And if there's anything I see with my own wife and these ladies is when they go to Target, what Lola wants, Lola gets, and what Lola wanted is just changing. It's not the TV like it was. It's continuing to move. Now, for Target, can they raise price on lower margin goods? I think that's a big question because they've been kind of unwilling to do that, and that could be a driver. But you got to remember, again, this is a different problem for Target than other retailers. I'd say that the most important thing for retailing is, can you survive? Mm-hmm. So I'm going to throw out something to you guys that I don't think anybody's talking about right now. The problems right now are dynamic and very tough. What is the probability a big retailer like Amazon could exit retail altogether in the next 5 years?
Are you saying that that's a high probability?
I'm saying there's a probability that's growing, and no one's talking about that right now, Alex, because we can see the problems going on in logistics. They're only getting worse. And in inventory problems at Target and Walmart are highlighting that, what you carry in inventory, let alone how you move it, is becoming even more frustrating. So I point out, because again, Target produces, they're going to produce about 30% return on equity and a come down in their business. I think I was looking at it. I mean, Amazon trades for a 50+% premium on a book basis, and they still produce lower return on equity, which is really, as we all know, it's not the retail business, which means the retail business is doing way worse return on equity. So who survives this, I think, will be really interesting, because this is a really tough circumstance to deal with the dynamicism of this consumer.
How would you answer that question, Cole?
Well, let's put it this way. I think Target's going to do fine in this. And that's how we look at this. In other words, this is tough, but Target's going to do fine. I can't say that for everyone else. And I think the bad news will continue to come. I completely agree with that, because the idea that this inflationary problem is just going to go to bed and everything's going to go back to, pumpkins and mice, that ain't going to happen. And that's not the way it's playing out.
I don't know what pumpkins and mice mean, but I'll just go with it. Hey, Cole, but to that point, you've been betting on energy before it was super popular. So obviously looking at an inflationary environment, that makes me think that you can actually extend, the energy rally can extend from here. What are you looking at? How you plan it?
Yeah, it's a great question. We've played the producers the whole time. We've liked oil in the ground. We like people that could produce. And the best money made was the people that, Wall Street had the least amount of confidence on. So it wasn't the big players. It ended up being, in our case, the Continentals and the Occidental Petroleums, where they had great assets and people didn't have a lot of comfort with their balance sheets. So if you go across the street right now, you'll find that all the analysts are pricing $70 to $75 a barrel. Why? They're looking at the futures curve and they're just using that as their assumption. When in reality, no one's going to produce new oil at $70 or $75 a barrel. And that's why no new production is going to come online, relatively speaking, globally. So what I find interesting is just the unwillingness to recognize that, like in 1973, when we had the oil embargo and oil price went higher, they never went back. They never went back to their prior prices. And until Wall Street and really investors recognize that, we could get filthy wealthy while stocks don't do well in the next 10 years.
Stocks don't do well. Okay, just describe what that actually means. Are the lows in for now? What do you think the next 12 months looks like? Are there going to be better opportunities in terms of entry points?
Yeah, it's called a bear market rally, guy, and they just look worse every time. The lows are not in. This just looks like we ended a mania. There's just nothing short of a mania. Many manias and problems, when you raise interest rates, they just all fall apart. Okay? And that's what we're dealing with, is we woke up, we got a dose of reality. And I'm 39, guy. There's most people my age have never seen something like this. So we expect more problems earlier. And I'll give a lot of credit to Jim Reed at Deutsche Bank. He had a great piece out a few weeks ago talking about the inflationary effects of the 1970s. Oil made a pile of money. Other commodities made it out alive. Stocks and bonds lost money in real terms, absolutely. But you got to remember, we're coming from much lower interest rates than then, or even if you look at the 99 to 09 period, the 10-year started at 6. I mean, we're in a new world that we've never seen. There are frameworks to look at from the past, but I think a lot of capital is going to get destroyed in this era.
Yeah, I'm 51. I can vaguely remember last time this happened. Cole, always great to catch up. Thanks very much indeed. Cole Smead, Smead Capital President. Really appreciate it. This is Bloomberg.
U.S. stocks now back to flat, despite Target here. Abigail Doolittle is tracking some of those moves today. Abigail?
Yeah, never a dull day here, Alex. Take a look at this overnight, all-day chart of the S&P 500 E-mini futures. A roller coaster ride for sure. Overnight down, and then around the time of the open, down more than 1%, and then up about 0.4% as Target started to come off of its lows, and tech was doing really well as yields went lower. That's the key to today. Yields going lower. The 10-year yield back below 3%. But we can see now we're looking at a small loss. As for some of the individual sectors that are either outperforming or underperforming, take a look at the oil and gas sector, up 1.8%. There are three different energy stocks that are making all-time highs today, one of them being Exxon. Software doing well, tech also doing well, hardware, but earlier those sectors had been up more than 1%, so that's really the reason that we have stocks coming in a little bit. And then finally, Guy, retailing down 2%, and that of course has to do with that second Target lowering of the outlook in 3 weeks, the stock under pressure.
Absolutely. It's going to be interesting to see where Target closes today. Abigail, thank you very much indeed. What are we looking at for the next 24 hours? Just to give you a quick heads up, this is the story. Primaries in several states. We've got California, New Jersey, Iowa, New Mexico. Tomorrow, that's going to be interesting. Earnings, Inditex, that's Zara, Eurozone GDP. Alex, what else we got?
Ed Ludlow is going to have a fireside chat with Kathy Wood of ARC at the Up Summit, so definitely stay tuned for that. We'll be looking forward to that. That wraps it up for me and Guy. This is Bloomberg.